Extreme bubble.
Yeah,
and so with these other indicators turning, do you think we're in for a stock market crash?
Yeah, and I think, first of all, that it's actually worse than that because the earnings have been manufactured by share buybacks. Because interest rates have been so low, it's been easy for companies to buy back their shares. And so now their earnings per share number can be higher because there's fewer shares. So they're not really driving the profitability. They're not driving the revenues. They're just shrinking the share base, but they are subjecting their shareholders.
So the earnings per share look better.
Right, but now they have all this debt.
Right.
But right now the interest rates are really low, so it's not hurting their earnings. But what happens when interest rates rise? And if they rise during a recession where their earnings are declining and they have no ability to pay the interest, a lot of these companies that were buying back shares might have to come back to the market and resell the shares to raise money to service or repay debt that they can no longer afford.
Which will cause it to go way down to the greatest undervaluation in history, I think.
Right,
so,
but the reason I think there may not be a stock market crash, even though one is warranted, and in fact, it would be a healthy development rather than to perpetuate the overvaluation and all the malinvestments that result from that. But I think this bubble is literally too big to pop. I think the Fed knows it. Again, that's why they've been talking about raising rates.
And so you think they'll do more of this, the quantitative easing for?
Right. Well, the way you stop the value of the stock market from plunging is make the value of the dollar plunge. And so rather than nominal prices declining, real prices decline. Right? So the real value of stocks, let's say measured in honest money like gold, plunges because the Fed is trying to prop everything up. They're trying to keep these bubbles from popping because they're literally too big to pop. They think the mistake that they made in 2008 was turning off the spigots. Right now they want to keep them wide open. And so it's the dollar that's more likely to crash this time than the stock market.
Yeah, I do think, though, that if the problems first develop in other countries, like if the euro has a problem or if China has a problem, we could see the dollar go higher. It might not, but I think that we could see a very, very short-term deflation. That's something that the Fed can't control, and then they will overreact and print into potentially a hyperinflation.
Well, I think we've already seen the dollar rally. In fact, there is probably more agreement among traders, speculators, in the dollar's direction. Everybody believes the dollar is going to go up. Everybody is long the dollar, betting on it continuing to rise, because everybody bought into this myth of a legitimate U.S. recovery, and they believed that the Fed was going to raise rates. So I doubt something that everybody expects to happen will in fact happen. What's going to surprise everybody is dollar weakness. Everybody is positioned for dollar strength. And I think that trade is already over. I think the dollar is fully valued or overvalued based on this belief. And when everybody ultimately has to come to the conclusion that they were wrong, right? When the Fed is forced to admit that the economy is much weaker than they thought, and instead of a rate hike, we get QE4, I think the dollar collapses. And so I wouldn't want to hold out waiting for another dollar rally. I think we've already had it. And I think now the next thing for the dollar is a big drop.
The move that the dollar made was, it's less than a year, right?
Yeah.
Now imagine if you're an importer or an exporter, what that's doing to your business. This whole thing of national currencies is just a silly, stupid game that countries play that hurts all of us. It hurts all of our prosperity. An importer or an exporter that sees the costs of their goods change by 25%, or the price they're able to get for their goods going overseas by 25% in 6 months. This is something, there's if you charted out the exchange rates, you could probably draw a line across it and say, my business will be successful when this is under here, and it'll go broke when the exchange rate is above a certain amount. If we were using gold, there wouldn't be any exchange rates, right? If they used honest money all over the world, if honest money was the money that we used in exchange.
Yes, it would certainly be a lot easier to do business, and we wouldn't have all these imbalances. The United States couldn't run these huge trade deficits if we had to pay for our imports with either exports or gold.
Yeah.
But when we can pay with them just by printing money that costs nothing,
right,
and we can make an unlimited quantity of it, But this is going to end in disaster. I mean, this is something that's never been tried on a global scale. I mean, we have had individual examples of fiat currencies being tried, in one country or another, and it always ends in disaster. It never works, and countries always return to a gold standard. But what's unique about this time period, since we went off the gold standard in 1971, since the world was on a dollar standard, and when we went off the gold standard, we took the entire world off of it. And this has gone on for a while, but I think we're in the final stages of the world rejecting this monetary system where the dollar is at the center because it cannot work.
Yeah, I do too. I was when I was writing my book, I loaded it into a spreadsheet looking for cycles. Every currency crisis, stock market crash, bank panics or whatever, looking for some sort of cycle in there. And what leapt out at me was that every 30 to 40 years, the world has a new monetary system. And here we are like 44 years, going on 44, after the end of the Bretton Woods being on this global dollar standard. I think the days are numbered, and that there is going to be a crisis, and I think it's going to be soon.
Okay, I'm going to jump in here real quick. When the world is using the dollar as a reserve currency, and it's backed by the full faith and credit of the United States, the country that has a $17 trillion debt that's in endless wars.
And is also in 140 countries at least, and counting. Has bases, military bases in 140 countries, and that blows my mind, because if you look at complete and utter American imperialism,
which doesn't follow the non-aggression principle.
Exactly. You've got a country that is not only telling all of the other countries what to do, how to live, while it is in complete disrepair. Infrastructure's awful, education's awful. The money is not backed by anything. It is the same value, perhaps, as the monopoly money. It's not as colorful.
Yeah. And this is all just a result of the central planning and not letting people be able to make their own choices and have competing ideas out there. And what will happen is, as countries, because maybe our foreign policy and some other policies just say, I don't want to do business with the United States anymore. Maybe the dollar isn't what we're going to use for the reserve currency anymore, and that's when we're going to see some of this start to take effect, at least according to these guys.
Actually, it's already starting. There have been agreements between Russia and China, some trade already, where they have agreed on a ruble or a yuan or yen, or I think it is, to completely bypass the petrodollar, because at this point, that is the only thing that is propping it up, and they, trading in oil in U.S. currency. But that's it. And many of the big players are making noises that we no longer are going to trade oil in U.S. dollars, and that, to me, that's the beginning of the end right there.
But not the end of the video clip. So here we go again.
This is margin debt, and the red line is just numeric, so the total amount of dollars of margin debt. But the blue is margin debt compared to the GDP of the country, so the size of the economy. And this chart is already a year old, but what you see is that every time it got over a certain percentage of the economy here, there was a stock market crash right after it got up to those levels. And margin debt is back up to those levels. And
more importantly, though, too, the actual quality of our GDP has declined, because so much of it is now just consumer spending financed by debt. The real wealth-producing components, manufacturing, mining, things like that, those parts of our economy have been contracting. So the size of the GDP is very vulnerable to a collapse, which would exacerbate those ratios, especially if there was an increase in interest rates. So we're certainly due for a stock market crash, but the economy is so vulnerable that it really can't withstand one anymore, which is why I think, again, the Federal Reserve is going to do everything it can to prevent that from happening, and there's only one thing they can do. is printing money. But unfortunately, the ultimate consequence there is even worse, because a dollar crash is going to be much more damaging to the U.S. economy and to the standard of living of the typical American than would a stock market crash or a real estate crash or a banking crisis. But unfortunately, the Fed doesn't care about that. It's just trying to delay the inevitable. It doesn't care how much worse it makes it during that time period, because they're hoping that there'll be a different administration in charge at the time. And, they have no idea, how much time we have. So rather than face the music, they want to, keep on playing.
Right, just keep on blowing that balloon up bigger and bigger, and every time it springs a leak, they slap a Band-Aid on it and keep on blowing more air in. For some reason, people get used to living in a bubble. They like it, and the politicians want to...
Well, some people like it, because there are some people that benefit from this process, but there's only a small sliver of the population. The overwhelming number is suffering, but they don't understand why. You talk about now, you have this huge growing chasm, between the very rich and everybody else. They call it, the 1%, the 99%, but this class warfare is being fueled by the very people that are creating it, and they don't even realize that it's their policies that are doing it. It's the monetary policies that we have that are responsible for this widening divide. It's not capitalism that's doing it, and just calling for higher taxes and more wealth distribution isn't going to solve the problem. It's going to compound it. We have to get to the source of what is driving this, and it is the central bankers and their monetary policy, and then to a lesser extent the regulatory and taxing policy of the U.S. government.
Absolutely agreed. The gap between Main Street and Wall Street, again, it's engineered by all of this currency they created going into Wall Street and not to Main Street, and that's the reason wages haven't grown. This is a chart that John Hussman came up with where he took overvalued, overbought, overbullish indicators and internals weakening, like earnings per share, and added those factors together. And what was interesting is every time there's a major top, this flashes, up to very high levels. The 1987 stock market crash, it nailed that. And we've been getting these alarms going off over and over again lately. And it may not. You might be right. The last time they started creating a lot of currency, Wall Street partied. But you did say that there's going to come a time where they're going to start questioning the currency creation, that it might be different this time. They might start partying on Wall Street first, but do you think that even with massive currency creation, though, that people could say this really has, if they've got to do it again, that means it really hasn't worked?
Well, they have to come to that conclusion yet, right? I mean, obviously they didn't come to the conclusion with QE 2 or 3, but I think there's been so much anticipation and self-congratulations by the Fed and the Keynesian economists, the Paul Krugmans of the world, that when it doesn't work, when we're right back where we started with, in fact, as far as back to recession, and if we've gone through the entirety of a business cycle and rates have been at zero the entire time, people might start to realize, wait a minute, I mean, when can you ever raise rates? And if we're doing a QE4, and instead of the Fed's balance sheet shrinking from the current $4.5 trillion, we have to expand it to $6-7 trillion, the idea that it's ever going to go back down again, people are going to see that, for the ruse that it is. And I do think there's going to be a loss of confidence. I mean, why anybody still has confidence in the Fed is beyond me. Yeah. But I think that confidence is going to go away. And when it does, you've destroyed the value of the currency. And I think that as the world tries to shun dollar-denominated debt, because the rates have to stay low. We can't raise interest rates to make the dollar attractive because we can't afford to pay those rates. So we have to keep the rates artificially low. We can only do that by creating more money. But the more money we create, the less it's worth, and the fewer people who actually want it. So then you have a situation where the Federal Reserve has to expand its QE program, not just to mortgages and treasuries, but to corporate bonds, to municipal bonds. They have to start buying everything. They become the buyer of only resort. And then the dollar really, has a crisis. And now the Fed is in a position.
And how moral is that there's an entity that gets to create currency that is going to become the buyer of everything, and they're creating the currency to do it?
Yeah, well, it's not moral at all. It's theft is what it is.
Theft.
But eventually people aren't going to want to be stolen from, and they're going to rebel against that currency, and they're going to look for a safe haven, something like gold, where they can protect themselves from really this monetary looting.
Yeah. Most people don't realize that we're in this grand experiment, that the Keynesians that run things don't actually know what they're doing, because this has never been done at this
Well, the irony,
level
though,
before.
is it's not an experiment, because we know how it's going to end. There's no chance that this can work, because history is replete with examples, again, on a smaller scale.
A smaller scale, yeah.
But if it doesn't work on a small scale, just putting it on a bigger scale doesn't change the outcome. It maybe changes the dynamics.
the same outcome, but much bigger to match the energy that was
So
put
the people
into
who
it.
say this is some kind of experiment, they're wrong. They haven't learned anything. We don't have to experiment. We have history. We can learn from the mistakes of the past. The problem is our central bankers and our economists never learn from the mistakes of the
Well, what I
past.
mean
They repeat them all.
is from their point. They think that they've got these little models that say if you do this, this will happen, and if you do, but they don't know that they actually can't control it. They can influence stuff short term. But,
They think that they think that
Right.
this time it's different, or they can tweak it a little bit. It's like somebody having another communist revolution and say, "Oh, we're going to get it right." The Soviets didn't get it right, or the Chinese didn't get, or the Cubans or the North Koreans, wherever it's been tried. We're going to try it again. We're going to have it. You don't have to try communism again. It's failed. Right? It doesn't work. It doesn't matter how you want to repackage it. It's never going to work. But everybody thinks they're smart enough that they can make it work. And so you've got people now that think, yeah, we can make this work. Yes, it didn't work in the past, but we're so smart that it's going to work now. And it's not going to work. It's going to fail even more spectacularly because it's even bigger.
Okay, we were talking about home ownership a little bit earlier. So this is a chart that goes back to 1980. It's the levels of home ownership have dropped back down to 64%. It hit 69% during the peak of the real estate bubble. What's your...
Well, first of all, it's going to go lower. But
Yes.
you're really graphing the disintegration of the middle class, who can no longer afford, thanks to the government, to buy homes. And you had all these government programs designed to make home ownership more affordable. And of course, like everything the government does, it backfires. And it's now made home ownership less affordable and less desirable. So you have record numbers of people who are now renting their houses from hedge funds and private equity funds. And you know what's been happening to rents for the past few years? They've been rising 4, 5, 6% a year, more, 10% in some areas, because people have no choice now but to rent. And those rents don't even make it into the CPI because they use something like owner's equivalent rent. And for some reason, that never goes up. But the actual rent that people are paying is going up. That's why I mentioned that right now you have 25% of renters have to spend half their income on their housing costs, which is up considerably from where it was in 2007, right before the Great Recession started. I mean, the old rule of thumb used to be that, housing costs should make up no more than maybe a quarter of your income. Mm-hmm. And now people are devoting half their income. Yeah. And of course, everything else is getting more expensive. Food is getting more expensive. Healthcare is getting more expensive. Utility bills. I mean, the only lifeline that a lot of Americans had is that gas prices came down. Gasoline got less expensive, but that's already changing. Oil prices are headed back up. And, people are wondering, hey, where was the benefit that we got? Because we didn't see it in retail sales from the lower gas prices. And there was a benefit. It's just that there were so many other problems that you couldn't see it because the consumer was drowning. And okay, now he's got a lifeline here, but you couldn't see it. It wasn't like they were spending the extra money. They needed the extra money for food.
Right.
But now that lifeline is being yanked away because gas prices are going back up.
And so this will go lower. The home
Absolutely.
ownership.
Yeah, because you need to eat. You need energy. There's certain things you have to buy.
That figure of 50% to put a roof over your head.
Yeah.
This is the percentage of your income going to home ownership or rent to put that roof over your head. That's pretty much a constant that you can trace back to ancient Roman times. You can only afford a certain percentage of your income, and you can see when something's in a bubble because it's at or beyond a certain extreme.
And think about this, Mike, because this is the cost of home ownership with interest rates at record lows. The Fed's got rates at 0.
Yeah, so there's nowhere to go.
It's never been cheaper to borrow money. You know, back in the day in the 80s, people were buying houses with 12% mortgages,
Right.
14% second mortgages carried back by the seller. I mean, how could we have afforded that? Can you imagine how much wealthier Americans used to be in the past when they can buy a house, put 20% down, and then pay 12% mortgage on the remaining 80%? Now, Americans are so broke they can barely scrape up 3.5% with a 2.5% adjustable rate mortgage. So, you know, you imagine where home prices would have to go, where their home ownership would have to go, if we just had a return to low interest rates, not zero, just historically low.
Right.
You know, or if people were requiring a down payment again. You know, so this is with all the artificial
real estate would
supports.
definitely crash.
Of course, either the
and
prices would crash or
yeah.
nobody would be owning homes. They'd all
Exactly.
be owned by hedge funds.
Yeah, yeah. So levels of margin debt, we'll skip that. These are different countries here, and all of these countries are in Europe. The blue here is different durations of their bonds that are in negative interest rate territory, where you have to pay to loan the country your currency.
Yeah, it shows you how absurd this is. And
Right.
that old expression, whom the gods would destroy, they first make mad, right? Well, you can see that we're on the eve of destruction when the world is this crazy,
Right.
that you would actually pay somebody money
To
or
loan
pay
it to
them to
them.
borrow when they have the use of your money and you get back less, right? I'm going to buy a bond for $1,000 knowing that I'm only going to get $999 back. I mean, what is the purpose of doing that? But, you know, it's actually worse than that, because I do believe that there are a lot of countries where their CPI is not really accurately measuring what's really going on with the cost of living. So there probably are a lot of other countries that have negative rates. I think
So
America,
when you apply real rates to
Yeah,
it, you
I think-
much of the world is upside down.
yeah, I think the United States has negative rates. I mean, we don't. We say, oh, we have 2% interest rates or for a 10-year bond, but our inflation is only 0.5%. I think our inflation rate is more than 2%. I don't think the government statistics reflect how bad it really is.
Right. I don't believe so either. I call it
I
the
think we
CP
have.
lie.
Yeah, we've got negative rates.
Yeah.
But the fact that there's actually negative nominal rates, where, you know, again, you buy a bond for 1,000 euros and you only get 990 something euros when it matures, you know, or even the interest that you make along the way when you add it to what you get back is still less than you originally loaned.
Right.
You know, because
Crazy.
now
This
now,
has never happened before in human history.
because it
And
shows
so
we're running out of rope here. And now, because people are saying, well, why should I buy that bond? I'm just going to hold on to cash. You know, and now, and if the bank deposits has a negative rate, well, why even put my money in the bank? I mean, why don't I just put it in my mattress? You know, now putting money under the mattress seems like it's a more responsible thing to do than loan it to a bank at a negative rate of interest. Because the bank could fail and you've lost your money. Why take a risk if you're not going to be paid?
Right.
So this is where
And
we've gone.
it's illegal to put cash in a safe deposit box.
I know. Well, some of these countries want to make it even illegal to have cash,
Yeah.
and they're cracking down on people who are even conducting their business in cash, which is, you know, the way around that, of course, is own gold, right? Own real money.
Yeah.
You know, if they're going to start punish you for owning euros or owning yen or maybe owning dollars, well, okay, don't own it. Own something real.
Yeah, that's what I do. My total net worth is split up between cash. Its vast majority is physical gold and silver. Now we're going to talk about what you can do to protect yourself in this environment. And Peter had some. We were talking about gold potentially basing here.
Well, I think it's been building this base now for a couple of years, and you'll notice, you know, every time we get down below.
Okay, all right. If you want to see some of those other videos, you can go to goldsilver.com and you can sign up and watch some of those other videos. Now, you know, we're not doom and gloom. You know, we sound like we're doom and gloom. I don't know, maybe we are. My dad would always say, I'm not doom and gloom, I'm just realistic. But anyway, we just want to address the problem so we don't repeat it. And that's what we want to get out there.
Well, I would like to be the person that actually learned from the past. You know, if you didn't learn anything from history, you are doomed to repeat it. And we apparently have a lot of very ignorant people that are pulling the strings, who either truly don't know what happened in history, which that could very well be or probably more likely do know what happened in history, don't care because they're making their dough and screw everybody
And
else.
we're talking about people at the top. We're not
Yeah,
talking
we're
about
not-
people.
not-
you know,
not yet.
the real people that are pulling the strings and
When I
setting the
say
system all
the
up that we're
puppet
in.
master, I mean the central bankers, the elite in that case.
Yeah, they're the ones that make the decision. So, you know, we're not giving investment advice by showing this, but just an analysis of what's going on. And so it's going to be up to us individuals to try to figure out what's best for us. You know, if we know some of this stuff's coming, that might make you make some different decisions. Maybe you're not going to keep voting for Democrats and Republicans because guess who brought you these problems? It wasn't the Libertarians.
Nope.
So anyway, we're going to go ahead and wrap this up, and hopefully Ron Senkush will be back on the next show. So see you then.